Inflation in America may lead to more interest rate increases in Australia after this week's shock data showed American inflation at a 40-year high. The local share market yesterday had its worst day in almost 3 months on renewed fears of a global recession, although that's recovered some of the losses today. Let's have a look at some of the key numbers here. Core inflation in the 12 months to August in the US jumped to 6.3%. Headline inflation is 8.3%. which is close to a 40-year high. I caught up with George Washington University's Assistant Professor in Economics, Stephen Hamilton, for his take on where America and Australia's economy are heading. Those inflation numbers this week caused a bit of a stir, didn't they? And quite a lot of volatility on Wall Street.
Yeah, look, I think we have to understand that coming out of this pandemic, the road is pretty bumpy. So you're going to get some months where the figures are a bit better than expected and some months when they're a bit worse. Now, this month in the US, inflation, actually the headline rate seemed pretty good, 0.1% month over month, so barely increased. Energy prices radically declining, and that's really taking a lot of pressure out of the headline inflation number. The trouble is, underlying inflation, right, once you look past those outliers, rose by a 0.6% in the month, and it's up more than 6% through the year. So, you know, for underlying inflation, that's beyond energy, beyond petrol, right, beyond some of these headline numbers, is really coming strong. And what that suggests, and this is the thing that people are worried about here in the US, that suggests that inflationary pressures have become entrenched. They aren't just transitory. They aren't going to go away on their own. And that to bring them under control is going to take a lot more restraint from the Fed and from the government.
So in that context, what does it say about the prospect for rates in the United States?
Yeah, so the Fed, just like the RBA, has been raising by sort of supersized amounts, right? They meet less often than the RBA, and they have been increasing by bigger amounts, 0.75 rather than 0.5. And I'd expect that not only to continue, but there's potential for an even bigger increase in rates. A big problem with this inflation in the US, again, being underlying, right, being sort of a lot of momentum behind it, is inflation expectations. So we see inflation expectations in the US, the short term, above 5%. So even though we've had a lot of Fed tightening, inflation expectations have come down, they're still quite high. And so the Fed is going to be really concerned that it isn't doing enough or hasn't done enough to date to try and bring those under control so that we can expect sort of the inflation outlook over the next 6 to 12 months to be more controlled. So I suspect it's more of the same, potentially even further increases in rates. And the key there, the concern obviously, is that it may be the case that to bring inflation under control, we're going to have to pull the brakes on the economy even harder, which means higher unemployment than maybe we expected.
So what are the implications for the RBA's own considerations when it comes to interest rates here in Australia?
Yeah, look, immediately the Australian dollar fell, right? So there was an immediate spillover. We saw the ASX fall along with the US stock markets. I think the issue for Australia, is the US is ahead of Australia on the inflation curve. Right. So we were thinking back at the start of this year, there's not going to be an inflationary problem in Australia, while the US inflation problem had already gotten out of control. Right. So I think that what we're worried about in Australia is that a similar story is unfolding. We're just further down, behind them. Americans are further down the track. So the RBA is going to be looking at these figures and thinking, is this where Australia is headed, right? Is there potential for the inflationary problem in Australia to get more out of control than we thought, for underlying inflation to rise more than we expected, for this to be less transitory than we expected? And that means the RBA is probably going to follow this, take this signal that maybe if it was considering lifting off the brakes a little bit, right, moving from 0.5 to 0.25 increases, I suspect this might tip them in the other direction, and I think they might continue on their pretty heavy constraint kind of pathway.
So you've been back in the United States a few months now, and back at George Washington University. Give us a sense of the mood there. Do you think a recession is likely?
Yeah, look, it doesn't. I tell you what's tight. You go to. It's a bit like Australia. You go to restaurants and there's no staff. No. I mean, there's people paying massive bonuses to get people to work for them. And supermarkets, wait times for things are out of control. Airlines are delayed 3 hours. So we have very similar kinds of supply constraints to what we have in the US, in Australia. And I think that supply constraint is really building into this kind of inflationary pressure. It doesn't look like easing up anytime soon. The energy sort of side will help, but I do think that the constraints on economic activity are extreme. And when we add to that higher interest rates to try and bring that inflation under control, it's hard to imagine that there's a pathway out of this without a big decline in economic activity. Now, that doesn't have to mean a big recession in a traditional sense, but it does mean the economy is simply going to have to go a little slower for a longer while than what we thought, in order to let those supply constraints open up and ease over time. In 2 years, I think we'll be where we thought we would be. But in the meantime, I think it's going to be a rocky road that we still need to traverse.
So in the medium term, you're still relatively positive about the outlook there and here?
Yeah, absolutely. I mean, I think we should be optimistic. I mean, look, things weren't brilliant before the pandemic, and the hope is that we come out of the post-pandemic period in a better position than what we were, right? That we keep unemployment lower than it was before, that we keep economic activity higher, and I think there's decent prospect for that. And I think the Treasurer has talked about this. I think he's right to say, we have a bright future, but there's going to be a period of difficulty. And I think what we have to really think about is, we had a huge shock, right? The pandemic was a once in a century economic shock. It cost, many jobs. It cost, massive amounts of lost output. And we went through it pretty unscathed, right? And we to do that required a lot of fiscal stimulus, a lot of monetary stimulus, and we shouldn't imagine that it was free. And I think this inflationary period coming out of the crisis is sort of that debt coming due, right? And I think we need to pay it. Hopefully we can pay it reasonably cheaply. But once we do that, I think we can get back on the path to growth and hopefully maintain unemployment at a kind of record low level.